Hello and welcome to CapacityTV. Today we're joined with Fraser Bell, Managing Director of BSO Networks. Welcome, Fraser.
Welcome.
Which markets does BSO Networks operate in, and how does that differ from other low latency service providers?
BSO Network Solutions is a global provider of low latency, high availability networking solutions for the emerging markets, and we specialise in taking enterprise clients, finance, legal, oil and gas companies into the emerging markets as they penetrate into these markets. From our perspective, we've gone to Moscow, Dubai, the lucrative Asian markets, and also the Latin American markets. For us, these strategic investments were a way of producing a competitive advantage against the global market, but also being able to identify for us what is a way in how we can bring our skills and knowledge and expertise into these emerging markets.
What are the challenges of offering low latency services in emerging markets?
These are high growth countries, high growth cities, and typically the infrastructure is behind the growth of the overall country and therefore the key markets. So therefore the challenges are that of infrastructure, that of legal restraints, that of compliance for the type of businesses which are established Western businesses which want to move into these markets. So you have the combination of the needs and the demands of the Western companies wanting to penetrate into the emerging markets, and then you have the emerging markets needing and wanting these companies coming in. So the demands we see and the restrictions we see are that of the correct infrastructure, the correct sort of engagements, legal engagements, service engagements, and ultimately the commercial reality with which emerging markets bring.
Is it possible to achieve the same levels of low latency in emerging markets as is currently found in developed markets?
The key dependency on latency is the proximity to the alternative market. So the infrastructure within the emerging markets which BSO trades in today, such as Moscow, Hong Kong, the Middle East, Sao Paulo, for example, all have very good infrastructure near the key financial markets. So if you have good infrastructure and the proximity of the trading market is within a similar distance as that of the established markets, then the latency will be similar. However, the established markets where low latency is a requirement are all there for particular reasons, and that is proximity. So what we find is that the emerging markets, yes, have challenges of infrastructure, but also their emerging markets, because their proximity to other business markets is reasonably close. So from our perspective, yes, it is achievable, but it's achievable within the proximity of the alternative market.
Apart from the financial sector, however, which other industry verticals do you think will potentially be opening up to low latency?
Low latency from BSO Network Solutions perspective is the ability for transactions to happen in a faster, more efficient way. And, so therefore, oil and gas, telecoms, legal sector, mobile sector, voice sector are all relevant in terms of wanting and needing quicker transactions to produce better service for the customers, or be able to transact to produce a value against the competition. So from our perspective, it is definitely the elements which follow the financial sector, such as legal, accounting, etc., but also oil and gas, telecoms, those three sectors, they are definitely the next wave.
Finally, which other emerging markets does BSO Networks hope to enter into the coming years?
Having been operating in the global telecoms marketplace for 8 years, the identification of the next wave of emerging markets is principally down to three things. That is financial demand, infrastructure, and also a telecoms marketplace. So when we combine those three things together, we identify that because we exclude Africa, then we will be looking at Asia, places such as Thailand, India, Korea. Those three markets blend very well with the current Asian wave of business. So therefore, there's an interdependency within those markets for the current Chinese, Japanese marketplace. How we look at the market is how can we consistently have a business stream and revenue and win business, and therefore that's why we identify that within Asia, that's where we think that the most business will come from emerging markets.
Brilliant. Thank you, Fraser.
Thank you.